Good afternoon. The Fed statement is out, and welcome to the mortgage market update for September 23rd, 2021. Yesterday, the Fed had their Fed meeting and released the Fed statement. Yesterday, the Fed left the Fed funds rate unchanged and did not announce when they were going to start tapering. But in the press conference, Fed Chairman Jerome Powell, when pressed, he said he was keeping his eyes out and seeing when he was going to start tapering because he thinks that they're going to start tapering very soon. Now, the next Fed meeting is November 3rd, so it is coming up relatively quick, about 6 weeks away. And we believe that they are going to announce that they are going to start tapering on November 3rd or at the November 3rd meeting and begin actually reducing the purchases sometime in December. Now, they have another Fed meeting around December 15th, so that lines up pretty well. The plan is widely expected to reduce their $120 billion per month buying. Now, that is made up of $80 billion in treasuries and $40 billion in mortgage backed securities. But they're going to be reducing that by about $15 billion per month. And when they do that, they will be done tapering by about June of 2022. Now remember, from now until then, they will still have bought up $660 billion in mortgage-backed securities and treasuries. That's still $60 billion more than the Fed purchased in QE2. Now, you got to remember, QE2 was back in 2007-2008 recession when the Fed only purchased $600 billion in treasuries and mortgage-backed securities to help get us out of that recession. So we're still talking that the Fed's going to buy more than $60 billion in just 6 months than they did during that whole entire recession. And remember, under this current administration, we know that the Fed is not being transparent on their balance sheet. We believe that they're buying an additional $60 billion in bonds every month due to mortgage runoff. And when I say mortgage runoff, what I mean is people that are paying off their mortgages due to refinance, etc. So the Fed isn't saying anything about that. And when they were pressed on this topic, they said they haven't even thought about it. So while tapering may be coming, there's still a lot of buying ahead of us. Now, existing home sales also came out, which measures closings on existing homes, and they were down 2%. Now, sales year over year were down 15% for the month of August. Yes, that sounds like a lot, but there's more to it, and here's why. Inventory was down 1.5% last month to 1.29 million homes for sale, but inventory was down 13% year over year. Now, do you understand why sales are down? If there's not enough inventory, there's no sales to be had. The median home price was reported at $356,000, which is up 15% year over year, but it is cooler than the 18% increase in the previous report or the 24% increase we had in the report before that. Now, first-time home buyers did account for 29% of the sales, which is down from 30%, but cash buyers remain stable at 22%, which is up from 16% last year. Yes, there is less first-time home buyers than before, but that's because inventory is down and the prices to buy a home are getting higher and higher. It's hard for a first-time home buyer to find a house and then, of course, to get their offer accepted. They're getting outbid by existing buyers coming back and also by investors. The Mortgage Bankers Association released mortgage application data for last week, showing that purchase applications rose 2% last week after rising 7.5% in the previous report, and this took it to the highest level since April. Year over year, purchases are down 12% against some pretty tough comps, but when factoring in the rise in cash buyers, they are actually only down about 5%. Purchases are showing quite a bit of strength with inventory levels being down 12% since last year. Refinances are up 7% since last week and are now down 5% on a year over year basis, which compared to high levels from last year, that's really good. Refinance share of the applications increased slightly, and we now make up 66% of the total volume. Interest rates compared to this time last year remain very stable and very constant. The bottom line is we're still seeing a very strong demand in purchases, and this was accelerated over the past 2 weeks. If you have any questions or you're looking to get pre-approved or get your refinance done, or maybe you're looking to break ground on that new construction, please reach out to the Rebecca Foote Mortgage Team, 717-609-4044, or you can always jump on our website at RebeccaFoote.com. Have a great day.